Hey fellow Stock Guardians, it's Hodamer, founder and CEO of StockCard, and this is our Stock Market Daily Roadshow. It's August 26, 2021. Today I looked at the jobless claims report that held the market back in the red. I also dug into the future growth of the pet care industry and created a stock screener that got me a hidden gem stock to bet on the future of the pet industry. Let's get going. The market indices ended the day in the red after quite a few days of a steady upward movement. The indices pulled back as investors digested some new economic information. First up, the new jobless claims report came out and showed the claims were up slightly from last week by about 4,000 cases. This didn't entirely cause for alarm, but certainly missed expectations. Also, the US Bureau of Economic Analysis released the economic growth numbers today, coming in at 6.6%, which is barely above last month's 6.5%. It's a good sign to see that the growth is stabilized despite consumers' uncertainty. Overall, there was enough negativity in the market to hold the indices back from inching upward. Folks, we ended our feedback survey yesterday and we are now reading through your feedback. I'll let you know about the results tomorrow. So today, before we get to the pet stock analysis of the day, let me thank you for being a stock guardian. My team and I appreciate you watching, listening to, and reading the Daily Roll episodes. And more importantly, we thank you for using a StockCard platform in your stock market research. Thank you for being a stock guardian. If you aren't a user yet, I'd like to invite you to try now. First, hit the like button, subscribe to the show, and create a free account on stockcard.io. Thanks for becoming a new stock guardian. As an investor, my style is to invest in companies that play a significant role in my life. I believe our portfolios are the financial reflection of who we are. And as a dog mom, I'm always interested in pet-related stocks. My husband and I spoil our dog Kratos so much, and I don't believe we are the only ones. Just hear these numbers I found on petmedia.com. 61% of US pet owners will pay more for food to target pets' dietary needs. Dog owners spend $73 a year on grooming. Cat and dog owners spend about $300 a year on pet food and treat. Over 50% of cat and dog owners give their pets a Christmas gift or treat. 69% of millennials opt for their pets' natural and organic products. 43% of dog owners and 41% of cat owners buy premium pet foods. I 100% believe all these numbers. According to the American Pet Product Association, 2020 was the first year the pet products industry generated over $100 billion in revenue. I can also see the evidence of this booming industry on a stock card. For example, on Chewy's stock card, ticker CHWY, I noticed the pet e-commerce industry is expected to grow by more than 11%. This convinced my team and I to launch a new list of stocks on StockCard. Say hello to the pet stock collection. This is a list of 48 stocks that are somewhat involved in servicing our furry babies. The companies range from retailers to insurance carriers. There is a wide range of niches within the blanket term of pet care, so there are even more specific collections. Search pet on a StockCard search box, and you can see the subsegments of the pet care industry: pet e-commerce, pet food and drinks, pet healthcare, and pet insurance. Now, not every pet stock is worth owning, even though the industry is growing double digits rapidly. I started a new screener on StockCard's screener tool to figure out pet stocks worth buying. I added the pet care collection in the screener search bar and picked a few specific filters: good sales growth, high growth potential, and no cash concerns. The results was a short but sweet list of 4 pet care stocks worth considering. I'll leave a link to this screener in the show notes for today's episode. 2 familiar names caught my eye first: both Progressive, ticker PGR, and Independence Holdings, ticker IHC, are significant players in the insurance game and have extended their services to pet owners. The one stock in particular that interested me was Heska, ticker HSKA. I've never heard of it before. This is a pet pharmaceutical company that sells veterinary products. Its operations are split into 2 main divisions. With the first division, the company provides animal healthcare products to consumers. This is the front face of the business and what the brand markets itself as. The second division deals with vaccines and other animal pharmaceuticals in the agriculture industry, such as cattle medicine. Heska's stock card is looking great. It has solid green ratings for industry and sales growth alike, not to mention a positive free cash flow. The company isn't quite profitable now, but having a positive free cash flow indicates that management is reinvesting profits back into the business. However, the business has found a way to make its core operations run profitably. This stock has treated investors well too. Just take a look at the past investment return. You would have been rewarded for banking on Heska instead of the S&P 500 for the past 10 years. According to the company's CEO, during the earnings report earlier this month, the company will continue growing steadily, rising the earnings before interest, tax, depreciation, and amortization EBITDA margin by more than 10% for the rest of the year. It's balanced and well managed with a bright outlook. If you want to invest in the growing pet care industry while avoiding some of the weaker businesses, this is an outstanding stock to add to your list. That's it for today. If you haven't already done so, please give a stock card a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the Stock Picks page on Stock Card platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And like, subscribe, and share these daily market recap reports with your fellow investors. Come back tomorrow for another market recap report. See you then.